right. There's 1154. It has 820, so that's not right. We know that. Trying to get these ahead a couple minutes. They may make it, they may not. But we will start reviewing chapter 2, but it will be the 18. And there's a lot of differences in our chapter 2s because Donald Trump's new tax act came out, and that's made a difference. Let me see if I can bring up. Oh boy, I brought up corporations. So here you have to be careful to bring up. I don't believe they had PowerPoint ready yet for 19. That's why it was incomplete. They didn't download it, what have you. But all right, the basic formula for calculating tax is right here. Now, you people that are live streaming, I know a couple of you are. I have to apologize for last week because you couldn't see anything I put on the screen. You couldn't see if all you saw was probably a speaker or something that my computer was pointing at. There's a little green button on there. Since last May that I used this thing, I forgot to press that little green button. That little green button shares everything I've got here. You should be able to see today or whenever you live stream. All right. But that is corrected. And in Madrigal County, one of them did not record. I don't know why. I haven't found that problem yet. But I don't know if anybody texted me about live streaming this class or not. Turi has. All right. She said she's watching from home and able to see the slides today. So, Turi, thank you. And I think we got the problem corrected, okay? All right, this was a 1040. I've blown it up a little too much. A 1040 is your tax formula. Now, exemptions on last year's tax return won't be on this year. You don't get any exemptions. All right, but you still have a filing status. We looked at those a little bit. We got to look at wages and taxable interest, dividends, and taxable refund from state and so forth, capital gains, IRA distributions, pensions, even Social Security. This is all your income. Now, adjustments for income is all of this, and we'll be looking at some of those along the way, education expenses and so on, moving expenses, and of course, anything else you take out up here, whether it be business income, you took out rent expense. That's an adjustment for. Now, we looked at for and from. Everything you deduct on any form on the front of this return is FOR. And back here, you got a couple of places that are FROM, from, okay? My pen's not writing today, so I can't, well, it's writing in here. It would not write in Madrigal County. All right. Well, I'm glad to know that. It would not write anything in Madrigal. Okay, there are two up here that we need to look at, and deductions from would be exemptions. All right, I have got this where I can't blow it up anymore. So itemized deductions. Now, which one of those two now will not be on there this year? The exemptions. I hope I'm marking the right one here. So for next year, we're going to do away with, well, 2018. That line won't exist on your new tax return. But now this line, itemized or standard, last year as a single person, I got about $6,000 standard deduction. They're in the old book. And I would get $4,100 exemption. That would be 10-1. However, this year I get a $12,000 standard, which I get a break of $1,900. Now, if I'm in a 25% tax bracket, that's going to save me 25% of $1,900, which is $400 and some dollars. Okay, now that's where Trump is giving everybody a tax break. I've already seen a little increase in each one of my paychecks from Bluefield State because of Trump's tax law. Hopefully everybody does. Okay, now I'm losing the $4,100, but I'm gaining 12. But that makes another problem. You see, this is going to hurt some people. If I had $13,000 worth of exemptions, worth of itemized deductions, which is still around, and I had got my 4,100, that would give me 17.1, wouldn't it? But I lost this 4,100, and I would go with my 13,000 versus the standard deduction. I would go with my itemized deduction. And I lost money that way if I itemize. So some people may lose a little bit under Trump's laws. I'm trying to be fair and not be political. Okay? All right. And then we looked at total income. Now, was this PowerPoint working last week? This one was, wasn't it? I don't know if I showed you this or not, did I? Okay. Well, we didn't have it. I had downloaded 18, tried to download 19, which is partial. Bob sells a piece of property for $1,000. He has a cost of $700. Bob will include $300,000 taxable gain. Well, you're not going to pay taxes on something you paid taxes on before. Okay. All right. Clayton, anybody ever give you anything? Well, was it worth over $100? It'll be tax-free if it's a gift. Okay. But you can only give so much a year. Now, life insurance. Aren't you married? Do you have insurance on your husband? Do you have kids? You don't have kids. Somebody else in here had kids. Not Jonathan Coe. Might have been somebody in Mandrill had kids. But if you have kids, you should have insurance on your spouses. A lot of people just take it on the husband if he's the principal wage earner. But if the wife dies, that husband's got extra expenses in child care and cook and house cleaning. You need insurance on both. Okay. Now, life insurance, I took out an insurance policy a long time ago. It's cost me $81 a month. And it's only for $50,000. But if I had done over again, I'd have taken out term. This was whole life. And term would have probably cost me at that time no more than 20 a month. But I had this together on my wife and me. I lost my wife, so I've already collected 50,000 once. Okay, I've still got that insurance, and it's growing. I can cash it in today for about 22. Now, if I don't cash it in, they add it on to the 50, and that 22 makes my policy worth 72. And I'll probably leave it to one of my children or both, and that will be tax exempt dollars. My life insurance up here, I'll leave to one of my kids. It'll be tax exempt. And I also still have a life insurance at the community college that they keep on me because I'd worked there so many years. So anyway, I would not take out insurance. Now that my kids are grown, I don't need to take out another life insurance and wouldn't. No need to. My kids, they'll make it. All right, welfare. You know, there's a lot of welfare benefits now, including free meals, unless everybody gets them, including books, free dental, free health, Medicaid. I guess that's free health, all tax free. Now, if a person is on welfare, if they go out there and make, now West Virginia, the minimum wage, and you all know what the minimum wage is in West Virginia? How much? And the federal minimum wage is how much?
I don't know. I'm assuming it's like 9.
No, it's less. I believe 735, Clay. 735. All right. Now, the higher one prevails. But if you had a couple of kids and $8.75 an hour, multiply that by 40 hours. Clayton, you got a calculator, cell phone, or something that'll multiply. Multiply $8.75 times 40. 40 hours.
350.
All right, 350 times 4 gives you about $1,400 a month, don't it? All right. Now, if you had a couple of kids, had to pay babysitter, it'd probably be better to get welfare, wouldn't it? If you get welfare, you might have free dental and free health, get low income housing, get a break on your electric bill. All right, food stamps. And it probably amounts, hey, why should I work? Now that's why a lot of people get welfare. Why should they work? They're doing better on welfare than paying minimum wage. Over here, 735 is $1.40 an hour less times 40. That'd be about $66. $1.40 times 40. No, $66. So anyway, I would rather work. This makes me 51 years of teaching. That's something most people don't ever reach. And before that, I worked at a co-doc for a year. And in the summers, I worked at Chrysler Corporation in Detroit. And then I laid carpet one summer in Detroit. So I have worked since the 7th grade. In the summer, I worked at a sawmill. So I've worked ever since. In high school, I worked grocery stores, Food City, which was then Piggly Wiggly. I've only checked my phone to see if somebody sent a text asking a question about the class. All right. Certain scholarships. Either one of you two on a scholarship? Who does?
VA.
All right, VA. Was your daddy a veteran? You're a veteran. Well, great. Good for you. That's tax-free. Very good. How many years did you stay?
Almost 4 years.
Army? Go to Iraq?
No, I got lucky. I got stationed in Fort Leonard Wood, Missouri.
Oh, okay. You did get lucky. Well, I'm glad you didn't have to go to Iraq. I know one young man that went to Iraq and things he saw, his friends getting killed, it messed him up.
I have friends that are like
Messed him up. All right. But so VA benefits and certain scholarships and so on. Now, does this still work with VA? I had a student one time getting the VA benefits. Now, when community college first started, well, come in, stranger, haven't seen you all in 20 minutes. Okay. They were getting VA benefits, and one guy, I was going to give him a W in class, and he came and asked me to give him an F because he said he got paid for an F, but he did not get paid for a W. Does that still apply to you? Really?
Of course, if you make an F, there's a good chance they'll make you pay it back.
To what now?
If you make an F, depending on the class, they can make you pay it back
Really?
for that class.
Didn't know that. All right. But the best way is don't take a W and don't take an F. Make something better. Right? Until my grandson decide what you want to be and be it. All of you can, except Cole. He spends 50 hours a week on video machines. Do you, Cole?
Probably not wrong about that.
Do what?
Probably not wrong.
Really? I'm guessing.
Not playing alone.
Yeah, my grandsons do too. Anyway, all right, Cole. Here's my lecture for you. Being on that video machine will not give you a future. It will not help you get a job, right?
Yeah.
That's what I tell my grandson. But studying will help. So anyway, Cole makes it anyway. Okay, so certain payment for injury. If you're hurt on the job, you get workman's comp. And if you get hurt in a car wreck, you may get injury payments. Anybody ever had an injury payment for a car? All right. I got to tell you about the one injury that I got paid for. Now, I don't believe in suing over everything. If I got burnt with McDonald's coffee, I probably wouldn't sue. Okay? If my tire blown out after I got 15,000 miles on it, I wouldn't sue Firestone or Goodyear. But sometimes you have to sue. So anyway, I went to try out a lawnmower. Okay? And now the lawnmower, I had an old Murray. I wore old Murrays out in no time. And you know, you had a clutch and you had a brake, just like a car. And when I went to stop that old Murray lawnmower, I put in my clutch and hit my brake, just like a car. So anyway, let's see, this John Deere I tried out. Okay. Somehow or another, you couldn't change gears. Something about the brake. You had to hit the brake, I think. I hit the clutch. One or the other you had to hit first. They didn't tell me. So I hit that brake and it wouldn't stop. And, you know, a straight shift car will stop when you hit the brake, whether you push the clutch in or not, right? You ever driven a straight shift? So it wasn't like a straight shift car. It would not slow down by hitting the brake. It kept going. And I didn't think the brake only worked if you put the clutch in. They didn't tell me that. So I went down, I thought the media would stop where they had it parked. Nope, it went over it, threw me over in a big pile of blocks, which were limestone, big old limestone rocks. And it bruised up my chest, my face a little bit, and so on, and broke my finger. So the salesman came out there worried about the lawnmower. But my wife happened to be there, and she took me to the ER so they could x-ray my chest and set my finger. Okay? So I did sue them. I went and got a lawyer because they didn't want to pay the insurance for my medical. So anyhow, the lawyer got something like $3,000. He took $1,000, so I got $2,000. Anyway, that thing was still crooked. But anyhow, it was not taxable. Bottom line. Okay. My own injury. Certain employee benefits. Now, one benefit we have up here, is life insurance. It's tax-free, but they only pay on $10,000. Now, the community college paid 2.5 times your salary. If my salary was $50,000, the community college had 2.5 times, would be $125,000. All right, the first $50,000 of that life insurance the community college would have on me was tax-free, but the next 75, you had to divide by 1,000, and you got 75. If each $1,000 cost me $1 or $2, they have to multiply 75 by $2, and I would be taxed on $150. Now that is in your chapter, and we'll cover it later. All right, now certain scholarships, we'll look at that in a little more detail. Most of them are tax-free, except for the portion for room and board. Now, other fringe benefits I have up here is I can take a day off if I want to, and I'm still paid, but I'm still taxed on it. And I told you I could use the gym and so on. Okay, certain foreign income, we'll look at that a little more in detail. Tax exempt interest, that's municipal bonds. Have any of you heard of Muhammad Ali? All right. He was a great hockey player, wasn't he? What was it, John? Okay. I saw an old movie a couple of weeks ago. Somebody reliving his life. But anyhow, on his last boxing match, he wanted, I think it was $10 million on his last boxing matches. Now he'd probably get 100 million. He got 10 million. He wanted to take that 10 million and put it in tax-free bonds like New York City bond or any city bonds or county bonds. He wanted 10% interest. He would get $1 million a year tax-free. That was his request in his last boxing match. So tax-free interest. Series EE bonds. Now, IRS has EE. You can go get them. The interest, let me tell you, is usually taxed. But if you take that interest out and use it for education, it is tax-free. but you gotta do certain things with it. Leasehold improvements I mentioned last week. All right. Achievement awards, $100 watch, a little award for this or that. But now, if you get a raise or if you get a bonus, if a bonus is your reward, award, then you are taxed on it. Certain divorce payments excluded. Why should you pay taxes on it twice? If you split with your wife, why should she have to pay taxes on any money you give her or vice versa? This is a good one. I asked all of you to invest in a home. IRS, a home is a home, a built house. It's a single wide mobile home. It's a double wide mobile home. It's a tree house. It's a boat house. Anything you live in is considered a home. Okay? And you can sell it now and you're not taxed on the gain. Okay? Not taxed on the gain. IRA distributions, most of these you are taxed on, but the Roth you had already been taxed on it. I swear I think that's a certificate, folks. And maybe a certificate of deposit. I don't know what that is. And then SS benefits. Okay. All right. If I've been teaching 51 years, if you got any common sense at all, you probably know I'm drawing Social Security. And I'm drawing a retirement from the state of Virginia. I'm drawing a paycheck for Bluefield, West Virginia, building up another retirement in West Virginia. So the lesson from that is don't retire and totally depend on Social Security. You can't do nothing except exist, and some people can't exist. Social Security won't pay you that much. So have another retirement, whether you take out IRAs or some 401k or B or whatever, have another retirement when you start to work. All right, we know wages, that's what most of you are familiar with, they're taxable. Business income is taxable. Gains if you sell property is taxable. Interest from a bank or wherever is taxable. Rents is taxable. And I mentioned if you got any of this West Virginia royalty income on gas wells or gas lines coming across your property, it's taxable. Dividends, taxable. Alimony paid to you is taxable. But if you pay it, then it's an adjustment. So somebody's going to pay taxes on alimony. If your wife pays taxes on it, you don't. Annuities. We're going to look at that a minute. What if you had a $100,000 annuity? You got to know what you paid into that annuity. You may have paid $50,000 for it. All right, but you got to know what percent is a return of capital. What percent? Now we will look in a minute at age tables. You find the expected age, you're going to get that annuity, and then we find the taxable portion. Life insurance proceeds is not usually here. That's iffy. Most of that is tax-free. Pensions, usually taxable. Look at COD. I don't know if that's certificate of deposit or what. Partnership income, IRD, and trust estate income. So we will look at chapter 2 at these items, chapter 3 mostly. All All right, now here's that for. Here's that from. All right. We don't got that one anymore, do we? Well, I got this other one. We don't have that one. So for HEI, your business deduction, moving expenses, RAs, alimony, insurance, what have you. And then from is just itemized or standard deduction. And my standard deduction this year is 12,000. I don't get this 4,000 exemption. Now, if I come up with 14,000 of itemized deductions, I will itemize, right? But if I come up with 11,000 itemized deduction, I'll take the standard, right? Common sense. Now, people cheat on taxes, whether it's through flea markets or black markets. Let's see, I went somewhere, I hope it's New York. People were selling black market movies. At that time, they'd go watch it the day it was released and record it somehow or another inside the theater, make CDs and sell it on the street. There's black market drugs in there. Okay. Now, a lot of people that have laundromats, that's coin operating. IRS can come in and view that for a week. If you're only turning in 500 income a week and they come and find out you took in 1,000 that week, they'll base your income on 1,000 a week. These arcades, I wonder how many of those people are honest. Now we're starting, and we're still on people cheating IRS. What are some other coin cash business? Arcades, laundromats, anything else? Well, when you go to one of these malls, you'll see a lot of these little old machines. Kids try to spend $1 to get a 10-cent total. That Cole's tried that.
When I was younger.
Okay. So anyway, they are cheating IRS. Now, however, IRS is cheating you because when I say you, I'm talking about the taxpayers. Taxpayers, in the majority, are ignorant about taxes. Some of them try to do their own. They don't take deductions they could get or should get. Some of them get their next door neighbor and don't know anything about taxes, do their tax return. They lose money. So IRS gets to keep a lot of money because taxpayers didn't get what's due, okay? Now, I know the IRS man, I've got an email from him today, I've got to turn in a form. So there's not many of you, there's 6. And I may have 3 or 4 volunteers from last year. Cole, would you want to prepare taxes starting in February? We start about February the 10th. And it goes for 10 weeks, and you can get 3 credits in a county elective or an internship. Could you do that for 10 nights? Jonathan, how about you? Clayton? I'd have to have all these participate and get 2 or 3 volunteers so we can try it. So you'll be ready for it. We will do the IRS exam together. I have to pass it too. We will do the IRS exam test together to get you certified. All right. Rent and royalty deductions, we know all these. Retirement plan contribution, you're not taxed on. Penalties for your IRS saving account, 1/2 of your Social Security taxes, your health insurance premiums if you're self-employed, alimony, moving expense, if you have to repay unemployment comp, jury duty pay. certain environmental expenditures, interest on student loans. All right, so there is some of your deductions. All right, here we go again. No exemption for 18. Now, the medical expense, now last year, the standard deduction for single is $63.50, but this year it's 12, isn't it? I think for joint here is 24. That's Trump law, Trump tax law. All right, but we'll still have most of these expenses to itemize. Some people believe in giving 10% of their salary. If they made $50,000 a year, if they give 10%, right there would be $5,000. State income taxes, and property taxes, they may pay in another $6,000. So before you know it, in mortgage interest, you may pay $7,000 or $8,000. Before you know it, a person can itemize and beat the $12,000, but now it's going to be hard to beat the 24. Married, filing jointly, it's going to be hard. Those other miscellaneous deductions, we'll worry about them later. Now, standard deductions in your new book. All right, Cole, can you all find those? Oh, Clayton, I just got this one in. Go ahead and use it just here. Gosh, those things are heavy. And ridiculous expense. Are you all sharing the book this semester? Hopefully we have one. I wouldn't blame you if you shared one. Okay, did you find standard deduction? All right. Make sure I'm correct here. All right. Now, what is it for head of household?
8.
How much?
8.
Married, filing separate?
12.
Same as single. If elderly blind, what do we do there?
30.
Just simply 3,200? What if you're blind and old?
That's both. 3,200 both.
Would that be 1,600 apiece?
Mm-hmm.
And what would this be? A maximum, would that be 6,400? See if there is a maximum. All right.
Maximum 6,200.
Well, then I missed that then. 16,600 was 32. Wait a minute. I was looking at 32 and $62. Okay. I don't know what I was at. Now, if you're married filing separately and one spouse itemized, both have to. If one takes the standard deduction, both have to. A non-resident alien. Non-resident alien. An alien in taxes is an international person, student, okay? It's not Mars. Now, we can forget about dependency qualification. It don't matter anymore. This don't matter anymore. All right. If you pay in taxes, it can be refunded. Withholding taxes. Now, earned income credit is refunded whether you pay any in or not. Your child care credit, all right, if you pay too much Social Security taxes. Now, I like these refundable credits. Now, if you were married with a child, you may have paid only in $500 taxes. Most likely you'll get that back and you could get, let's say, $3,500 more. You paid in $500, you might get back $4,000. I call this a negative tax. All right. And I believe in it. I believe this country should help the poor. That earned income credit helps a lot of people with low income with kids. Once again, don't have a kid to get tax breaks. It's a tax breaks, but don't have them just to get tax breaks. Have for some other reason. I think, in most states, a lot of people had kids because they get more welfare. Don't have kids to get more welfare. All right, now here are some credits that you can get. The adoption credit. Let's look up that one. Business energy credit, education credit. You get these, but if IRS, if you paid in $2,000, the most you could get back is $2,000. You cannot go down a negative tax like earned income. So these are non-refundable. But now if you paid in $2,000 taxes and you got these education credits of $2,000, it brings your taxes down to zero. So you still want these credits. You still want these education credits, which we'll cover in detail later. Now these credits you want might be partially refundable. Under what age? Under what? All right. Now, in your book, if you're following with me, the credit is reduced how much? How about your book? If you're following,
$50.
how much?
$50 for each.
Is it still 1,000? 2,000? All right, what are the thresholds?
$400 for married.
All right, filing joints, 400,000. And single? And married filing separately, 200. All right, folks, here's another break that Trump gave you if you got children. Did he leave this $1,000 or is it up to two?
No, they think
2,000? All right, folks, this went up under Trump. Okay, this went up under Trump. Now, if you're making under 400,000, you don't have to reduce that credit at all by $50. So basically, this part has been wiped out. And you're getting 2,000. Trump did try to help children, parents with children. All right. Now, can you find children with unearned income? Find me the standard deduction for children with unearned income. If it's there. Is the amount given standard deduction for children with unearned income? All right, that's all changed. Now, what does unearned income mean? Jonathan, what does unearned mean? All right, they got it from interest or dividends unearned. And IRS did this so parents wouldn't put a lot of money in their kids' name. Kids wouldn't have to file. Therefore, they were getting out of paying interest on taxes on their interest. Just seeing who. Now, Terry Texman said from the book, child credit is reduced $50 per 1,000. Page 218. Is that page you're on? But now, did you all say this went up to $2,000?
Like $2,000. It says credit is reduced by $50 for each stop.
Okay, so Terry is correcting me on that, okay? All right, thanks, Terry. All right, so we got 5 in attendance today, don't we? Okay, determining filing status. I looked at this a little bit on Thursday of last week. Now, before I go any further, 5 of you are listening and 1 will be live streaming. All right, we are not having class this Thursday. We are not having class this Thursday. I'm going to keep my accounting class to 11 o'clock, and then I'm heading to Detroit. I got a wedding, plus I've got a couple sick sisters up there. So, anyway, I will give you double assignments. So, your assignment for this Thursday and next Tuesday is do the even problems in chapter 2. Now, also read chapter 3. That's your assignment. Do the even problems in chapter 2. All right, and read chapter 3. Now, we'll look at some of those problems when I get back on Tuesday. And we'll try to get into 3 when we can. But chapter 2 is a good chapter. It goes over a lot of the essentials. Now, for this Thursday, there's videos on there. I'll try to find one and I'll have it on Moodle and I'll tell you which one to watch. I'll put on there something like tax class. Watch the video from last year on August the 22nd or something or another. But they do have some of those videos on there. I'll find one that might help you, okay? If you don't watch it, you know, it's not going to hurt you. All right. Okay. Determining filing status. Is taxpayer an abandoned spouse? All right. Is taxpayer married? Then file a joint return. Now, if you are married and you're abandoned spouse, that means the rascal left and you haven't seen it in 6 months. All right. Now, if your spouse left you 6 months ago and you haven't seen them, and you have to file a separate return, you're in a higher tax bracket. Well, if you can prove that he left you, you might get head of household or single or something, so you can get a better tax break. All right. Men do leave their wives all the time and vice versa. You never hear of them. Now, if you're an abandoned spouse and a citizen, all right, if you're still not single, and claim someone's a dependent. You can file head of household, or you can file single. So if you're abandoned over 6 months, now, if your spouse died during the year, you file a joint return. You sign their name also, or you put on the return they're deceased and make sure their social security number's there. And even if they lived 1 day in January, you can file a joint return. All right, now look at this. Let's say your spouse died this year. For 2019, you file joint return. All right. If you did not remarry, you get married following surviving spouse. No, wait a minute. This is 2018. I'm sorry. 2019, 2020, surviving spouse, which gives you better rates than single. You may have to have a kid here. They mentioned that. All right. And then for 2021, you want to do head of household if you have a child. If not, you do single. Okay, so it's better probably to file a joint return than separate. Sometimes you get spouses that are stubborn, they don't want it any other way. They have to file separate. All right, must have a dependent. Didn't say a child, said a dependent. Living at home with taxpayer paying over half the expenses. Now, I don't know how I got back over to this one, but we got to look at this kitty tax. We got to look at the new amounts. So please look at those, and we'll be working problems with kitty tax, okay? A capital gain's a pretty good deal. If I buy stock for $10,000 and I sell it, and if I sell it for, $6,000. Now, if I bought it for this, I purchased it, I sold it for this, how much of a loss did I have? How much of a loss? I have 4,000. Now, the law hasn't changed probably. You're going to take 3,000 as a loss. It reduces your other income. That's one way of me getting a little bit back. Then I'll take the other 1,000 next year. Now, if I was in a 25% tax bracket, I don't want to lose 4,000 to save $750, do I? But if I do lose 4,000, it's good to save $750. Okay. All right. Now, Trump's tax structure. Did you all have the old rates in the front and back of your book? You all had the old rates. The old rates, okay? So we'll look at capital gains and losses. We'll have a couple of chapters. But now, last year, and I want to look up in a minute this year, last year, you were in a 39.6% tax bracket. But the max you'd have to pay on capital gain was 15 or 20. So you got to break even on capital gains. All right. Have you got a page in your book? Who must file? Have you got a page in your book, who must file? These have to be way wrong. Who has to file? Have you found it? It's going to be in chapter 2. No, it's not the standard. They used to take the standard and add it to the exemption and come up with who must file. But there's got to be a page on who must file. Is there? Now, Trump's tax law probably drove these authors crazy on this book. They had to change a lot of stuff. Probably why they don't have solutions and things out. Have you found it? You did what page? 233. Okay, a single person can make how much money and not file? How much can a single person make and not have to file? All right, how much can a married file a joint return make, not have to file? Now that is the standard deduction, isn't it?
Yeah, they were.
Yeah, okay, now, Jonathan, you probably won't make over 12,000, will you? But would you want to file anyhow? He says, yeah, why? If you want a refund, you have to file. See, Jonathan may have made $11,999 and they withheld $700 on it. If he don't file, guess what? IRS likes to keep it. But if he files, IRS give it back to him. Folks, there's taxes for everything. All right, there's death taxes, there's excise taxes, sales tax. Now, I want you to think about it. Even under Trump's best plan, let's say you only paid 30% out in taxes instead of 39%, and you pay Social Security tax of 7.65%, and you pay state income tax of 5.75%, higher in some states. Pretty soon you're getting up to 50% of your income goes for taxes. Then you go out there and buy a car, you pay sales tax. Go out there and buy a shirt, you pay sales tax. And on some things you pay excise tax. And you don't know it, but you're paying extra tax on gasoline in West Virginia and cigarettes and so on because it's a luxury tax. Okay? Now, gallon of gas in West Virginia, I'm sure there's lots of federal excise tax in their state tax. When I go through West Virginia on Thursday, I'll have a full tank of gas before I go because West Virginia, I have to pay about 15 cents higher for gas up through West Virginia than I would over in Virginia. All right, so this has changed. Okay. All right, if you've got EIC, you got to file, or if you want EIC, you got to file, or if you have Social Security income, self-employment income over $400. That's self-employment. All right, just looking at a few of these laws, and I told you due dates. 3.5 months. Corporations, 2.5 months. Partnerships, 2.5 months, and S corporations. So we're due by April 15th, the corporation is due by March 15th. We'll worry about this return. All right? Now, I need you to look at the end of your book on problems. The end of your book on problems. Okay?
For this chapter.
Yeah, this chapter, chapter 2. Go to the end of the problem. All right? Now, what I'd like for you to do to keep you up to date, all right, I want you to do problem 61. Now, 61 is an easy little tax return problem. Now, I want you to put it on your tax return. Did you run a couple off for the day? Okay. Did you run a couple, Clay? Gone? Okay. Wait, you didn't run a couple. Okay, you already got a 1040. I want you to use it for this little report. We do for a week or so, probably in the next Thursday. I'll see you on Tuesday, then we'll be here on Thursday. So I want to keep you up with, okay. Now back, I was doing taxes manual. I had a tax office. Buchanan County. I ran part-time. I still taught. And I had a full-time secretary who would take down the information during the day. All right? And I do tax returns at night and on the weekend. And I did the manual, but I'd have her to type. That's before computers made things easier. All right, it would take me maybe an hour to do a tax return that I itemized. And I would charge $75 to $100. This is back in the 70s. Now, for an itemized deduction today, HR Block charges you probably about $250. Now, with computers and tax programs, which we have for the ITA, and I get TurboTax at home, I still do return. I'll do a itemized deduction return in 10 minutes and charge $200. That's pretty good pay per hour. Now, if I do a corporation's return, I will average $200 an hour. If I work like 5 hours, I'll charge at least $1,000 for a corporation return. There's a lot of money in taxes. Some of the big cities now, they have tax preparers that will come to your home. Oh, disabled, whatever. They'll come to your home, bring their little printer, do your tax return, print it out. Okay? And computer will travel. Okay? Then you've got H&R Block that is spraying up. And then you've got Liberty that has that stupid statute standing out advertising. Okay. Anyhow, they charge a fortune for your tax. And that's why I'm glad that we did 400 people tax return. And when we do a tax return through the ITA, I have one student to do them, another student to check them, and I check them if I have time, then IRS checks them. Usually they're pretty well right, even though we still make mistakes. All right, you know your assignments. No, not show up Thursday. All right. But now, Cole, if you want to show up, sit here and bring your computer and watch that video. That's okay. I'll try to mark a video. You all know to work the even problems. You know to be working on that tax return problem. And Clayton, you know to try to get that book. And I'll see you all Tuesday, a week from today.